Okay, very good morning. It's Friday the 8th of December. As you can see, I am not Saif Ali. The big news always happens on a Friday, so I'm pulling rank, and I want to talk about the big things that just occurred last night. So I'm sorry, Saif, you're going to have to wait a week until you get your next turn. So having a look then, a couple things to discuss this morning. Obviously, we've had a deal of sorts on the Brexit front, so we're going to talk about that and what exactly has happened, how the pound has reacted. We're going to have a look at what's happened as well in US politics, because in summary, there's been a deal to avert a partial government shutdown at the end of the week. And then, of course, we'll have a look at Bitcoin, because this weekend, Sunday, is kind of a near-term D-Day, because the futures market gets underway on CBOE and CME. So we'll have a look at that as well and what it might mean for markets. But let's go straight into the charts then and kick things off with I guess a broader risk appetite that's prevalent across the asset classes. So you can see here the DAX has gapped up slightly. That means then Euro stocks, the US futures marginally higher, gold lower, the Japanese yen is weaker, so dollar yen higher. And so, as I said, in summary then, an aversion of the kind of a no deal situation on the Brexit front, and also a deal struck on Capitol Hill, at least for the time being, kicking the can down the road on the debt ceiling issue. It's just created a little bit of risk-on mode this morning. Looking at the pound then, because you're probably walking in hearing the news that we've kind of done a deal, and so you're probably looking at the chart going, well, where's this big rally that you might have thought might have materialized in the pound? So one of the main things here that you need to do, I guess, with this is look at it in context. Now, if you remember, it was last week on the night or the late afternoon of the 28th. That was when you remember we had that Telegraph tweet that broke, I think it was 5:42 p.m. to be precise, when it came out. The pound rallied quite aggressively because Britain had made a kind of a concession, and that they were going to up the actual settlement fee. So it wasn't on the issue of the Courts of Justice or Northern Irish border and things like this. This was just on the fee size. That did get denied, but ultimately, you know, there's no smoke without fire, and inevitably it has become true overnight or this morning in terms of we're going to pay what is actually in a range of between 40 to 60 billion in terms of Britain to the EU. We'll have a look at that in a second. So the pound actually rallied. If I just take some of these off so we can see a bit more of where exactly we've been on a price journey here. We were down at lows really at 132.28, and since that point we've rallied all the way up to 135.50, which is not too far from where we are at the moment. So don't forget then that the market has already repositioned itself with sterling appreciation. So this deal getting done to the point of which at this particular crossroads means only that they've made sufficient progress in discussions. There's no actual deal here. That deal is still yet to be done. There's no transitional deal, certainly no trade deal at this point. They've just said that they've got to a point where they've all agreed that we can continue to talk further. And so, given the price action and the elevation that we've had in cable over the last 2 weeks, the reaction here has been relatively minimal looking at it on this basis. So upside level, of course, to watch will be where we printed at the end of last month. 135.56 will be a relevant level on the upside as near-term resistance. Actually, looking at the way the news came out was quite interesting, because as you can see here, it was yesterday evening. There was a couple of tweets I remember on my way home that I was seeing that was talking about they've made some progress and they're going to be working throughout the night to Juncker actually said and tweeted that they're going to deliver a press conference at 10 to 7. Now 10 to 7 is a pretty big significant telegraphed message to market participants, because what happens at 7 o'clock? You guys tell me, what happens at 7 in the chat room? Why would Juncker specifically want to deliver the latest update on Brexit at 10 to 7? Okay, I'll give you a couple more seconds. Okay, good. A couple of you coming in, Charlie. So this is when the futures market opens, 7 o'clock. So if you want to deliver some big breaking information to appease market sentiment, you know, a show of hand of how successful your talks have been, well, just do it right ahead of the open. Maximum effect then is what you want to do. The Eurex Open, Jimmy. So that actually lifted then when some of the Tusk comments were coming out last night and from Juncker, and then actually when the deal was struck, which was when they gave a press conference a bit later, well, I should say this was a couple of hours ago now, there was a live press conference that happened at that time I just mentioned. We rallied up, but then we dipped actually when the deal was delivered. And now this was being termed as a buy the rumour, sell the fact. Now why buy the rumour? Well, one of the things you've had here is check out the way as well of which you might think Donald Trump is unique in the way in which he uses Twitter as his platform to deliver information. But check out this guy, Martin Selmayr, let's call him, head of the cabinet of Juncker and the EU Commission. So a professor of economics and financial law, and he was tweeting, and actually he tweeted quite in a timely fashion this tweet. And I've actually spoken to a couple of traders, and I'm like, wow, what a world we live in. A guy's tweeting a white smoke picture, and people are buying the pound, and the pound's actually moving. This is what it's come down to, I'm afraid. So this tweet actually came with some of the rise that was seen in the early hours of the morning when the market was actually moving higher, and obviously people will know the analogy of white smoke, meaning that a deal has been done, and so people, the kind of savvy but more, I'd say, risk-prone traders already joining the trade. So then ultimately when the decision was delivered by these guys about an hour and a half later, the pound got sold. So they already bought into it, and then the facts were delivered, buy the rumour, sell the fact, and then the rest of the market comes in. The UK or retail participation will lift the market as they react then back to the headline. So quite interested to see the way in which the news has developed, because this is really an untraditional way of breaking news, but certainly Twitter becomes, you know, ever more prevalent in this case. I mean, this guy, this is Michel Barnier, who's the key player in the talks, and he's tweeting pictures of hurdling on the decathlon. It's just incredible that we're at this point. You know, I mean, people's lives are at stake. We're talking about the precipice of renewed, tensions within Northern Ireland between the Protestants and Catholics, and the guys in Europe are tweeting about hurdling. I mean, go figure. But anyhow, let's talk about the deal and then what we've got to look out for from here forward. This was the tweet that I was just from Michel Barnier here. What was even more funny was it seems like the UK contingent hasn't quite learnt the lesson yet about memes, because they turned up to the meetings overnight with no paperwork again, whereas Europe have got full facts and files. It's quite incredible, really. Anyhow, going back to the deal, having a look at the actual deal itself. So Britain reaching this deal, enshrining special rights for 4 million citizens and paying between 40 to 60 billion in the Brexit divorce settlement, which clears the way for trade talks next year. So as I said yesterday, the next we've got the big summit coming up on the 14th and 15th. So the process now will be some of these other 27 nations within Europe can go back to national parliaments and discuss the current state of play, and then we're going to hear much more details in about a week's time or so when we have that EU summit. The next summit after that is not until March. So this is why it was very key, and the pressure was really on these talks, hence all the politicians working throughout the night. Now, Arlene Foster, obviously the leader of the DUP, which is pivotal to to potentially sculpting this deal that's been formed, she told Sky News that she had secured substantial changes to the text of the deal. There is no red line down the Irish Sea, and clear confirmation that the entirety of the UK is leaving the EU, leaving the single market, and leaving the customs union. However, we did have from an Irish government spokesman, we've achieved all our goals in phase 1 of negotiations, including preserving the common travel area, protecting the Good Friday Agreement, and crucially obtaining a guarantee that there will be no hard border. On this point, I do feel personally this is a bit of a kicking the can down the road situation, because ultimately, you know, they still do need to find a concrete solution as to this border issue, and it is going to rear its head again in the coming weeks and months. So it seems okay at the moment, but probably the likelihood as well that the pound hasn't just run away to the upside this morning, as that many know that really what's been done overnight is just the beginning and probably the easiest part of this entire process of negotiation. You know, when it comes to the actual legal complexity, that's when the trade talks get factored in, and then obviously securing the transitional deal in the interim period is going to be also hinged on a concrete solution to that Northern Irish issue. In terms of the actual numbers, during the talks the UK estimated a net payment of 40 to 45 billion euros, while the EU put it at 55 billion. When contingent liabilities such as loans to Ukraine are added, the bill rises to an estimated 55.5 to 65.5 billion. Hence, at the moment, they've just agreed that it's going to be between 40 and 60. So again, when you start breaking it down, it's pretty wishy-washy what they've actually agreed here. There's not a lot of exact definitive details. So the main point is they've agreed to agree that they're going to talk, and so hence the reason the pound has really held on to the gains that have already materialized over the last week or so, but haven't really added to it any further at this point. One thing, what it might mean though, is that the kind of risk of headline spikes that we were seeing in cable, which did make it quite a risky asset to trade, because I know there's quite large slippage in the market as well for some of the guys trading the CFDs as well, is that actually the propensity for that to happen is kind of lessened now, and actually you might get a bit of a normal return of just general order flow coming to the market, which might make it a bit of a smoother asset to trade going forward, because now we've kind of got over this potential short-term big barrier to get through. So definitely I think trading cable overall in terms of aversion of these flash spikes in price activity is probably going to be a little bit better trading conditions going forward. If you're more in the way of kind of trends, good technical levels, and so on and so forth, rather than just breakout news and rumours. Okay, so that was the pound situation, and obviously that's probably had a bit of a net impact as well for the equity side of things, because you could tell earlier, a few days ago or earlier in the week, the European equity markets were looking a little heavy, because also don't forget the Europe has a high degree at risk as well, not only from an economic point of view, but also from a political point of view. If they don't push forward with Brexit talks, you know, they have to show other European countries, particularly those that have been at risk of a similar situation to Brexit before, or have intonated that way politically, that they can control and manage the situation. So a little bit of light relief, let's call it, this morning, and the DAX already up a decent amount here, and looking on a slightly longer time frame, coming up to well and above weekly highs and testing that of the highs that were seen in the prior week, which is actually a test up here at quite an interesting trading range if you're looking at the DAX. So just looking here back on the what would have been the 21st, and then also a test back on the 29th, so looking at the November highs here, and we're right up to test that now and have yet to break. So good levels here, and even going further back you can see that that price point also was a good level of support back in the end of October. So an interesting level to watch here in the DAX. The other thing though that helps lift some of this sentiment is over in the US. You can see here, looking on the center right, my S&P chart following suit and sympathy with the European equity market. We're up at R1 test. So there was also some movement last night on Capitol Hill, and this is the headline: Congress passes 2-week spending bill to avoid a December 9th shutdown. So in summary, what's happened here is a partial government shutdown this Saturday is now being averted. Both the House at a vote of 235 to 193 and a Senate a vote of 81 to 14 have voted in favour of extending the government funding for 2 weeks until the 22nd of December. This was always, in terms of a timeline, it was a short stopgap, but before then they make a bigger decision towards the end of the year. But the point being is, and as we've kind of talked about quite a lot, is that I never really saw this as too much of a great issue, and that they would at least pass the short-term bill to then readdress it on the 22nd. So that has happened as well. So although it was a low-risk event, certainly it's been moved now off the table. And again, a little bit of kicking the can down the road as well on this side of things, because it will come back in about 2-3 weeks' time. But that, in combination with the European situation, certainly helps things. And then finally, to round off the kind of positive sentiment, you've had Chinese trade balance overnight. China's double-digit trade jumps, pairs global and domestic demand. Check out the export number year on year from China, 10.3%. Expectations were for 2%. So pretty stellar trade data. And so this is a lower, I guess, impact in terms of the kind of movements that we're seeing cross asset this morning, but certainly fits the narrative of more positive developments that have occurred in the last 12 hours or so. That being said as well, obviously China performing well on a trade perspective certainly helps global demand side of things, and crude oil this morning is seen on the ascent. So paring back some of the losses that we've seen more recently, and we're up around 20 cents in the WTI crude futures in the front month contract, 56.90 at the moment. So coming up to R1 here. Okay, so a few other things just quickly. Got to talk a little bit about Bitcoin because this is Coinbase. And obviously this is one of the major exchanges for Bitcoin. And I was looking at Coinbase because I saw a statistic. They were talking about a move from 16,000 up towards 20,000 took 90 minutes. So I did see a stat actually last night. I did tweet it, so let me show you this statistic that I saw here. So I was looking at the incremental changes, 1,000 barriers, and the diminishing time it takes to go from one to the other. Obviously, the higher we go, the smaller the proportionate percentage move. But just for the sake of kind of explaining it, the kind of 0 to 1,000 in Bitcoin took almost 2,000 days, whereas 18 to 19,000 took 3 minutes. So it's absolutely incredible. You can see it there. It's gone from days to day to hours to minutes, and who knows, seconds could well be on the cards next. So one thing though, looking at the exchanges here, was some of the volatility. I mean, this is just Bitcoin on the last few days. Actually, this is the last 2 days. You know, we've rallied, we're talking 50% rally in like 2 or 3 days. To put it into a bit of perspective, from the last week, we're up 57% in a week. So a cool $6,000 has been added to the price, essentially, from the around 10,000. Now, one of the things, obviously, that's going to be very interesting, and I wanted to just run over a few of the facts, was as of Sunday night, the CBOE and CME launched their Bitcoin futures contracts. And I've had quite a few questions about what does this entail, what are the timings, so on and so forth. So the CBOE and the CME will launch future contracts on the 10th of December and the 17th respectively. So actually it's CBOE that goes live on the 10th, it's the CME on the 17th, just to give you an idea. So it's not the full coordinated release, it's going to be staggered fashion on the different exchanges. There are some differences between the products that are going to be offered here. First of all, your tickers. So on the CBOE, Bitcoin will be XBT, whereas on the CME it will be BTC. Now, some of the interesting things to look at here will be, it's going to be denominated in dollars. Obviously, that makes sense. In terms of how it's going to be priced, so looking at the CME contract, it will be priced off a CME Bitcoin reference rate, which is an index that references pricing data from different crypto exchanges, currently made up of Bitstamp, GDAX, Itbit, and Kraken. The trading hours, so I'm sticking with the CME here, it will trade on CME Globex and CME Clearport Sunday to Friday from 6 p.m. to 5 p.m. Eastern. So it's kind of like trading, I guess, on the CME Globex if you're looking at the S&P futures, equity index futures, so on. The margin rate in clearing, CBOE's contract will clear through Options Clearing Corporation, 30% margin. The CME margin is a little higher, 35%. To give you one idea of the size, the contract unit value. So if you remember, Bitcoin's trading up at around 20,000 per coin. The CME Bitcoin future will equal one futures contract, 5 Bitcoins. So one contract will be the equivalent of 5 Bitcoins. So we're not trading fractionals of Bitcoin here. We're talking 5 whole Bitcoins, one contract. Most people on an institutional level, or let's say of a bigger prop house, whoever is going to be speculating of larger size accounts, they certainly aren't going to be trading one. So if you think about multiple sized contracts, it starts to make sense then that really this is a market only for the bigger market players, given the amount of margin as well you'll need to trade these products. Going forward though, this is quite interesting, and this leads me on to a point to be mindful of, because at the moment, even within this week, you've seen Bitcoin rise 50-60%, and you've seen Bitcoin fall 20%, then rise 10%, and all of this can happen within the matter of minutes. Well, this can't happen on the CBOE and the CME because of circuit breakers, trading halts, which are put in place to mitigate large-scale volatility. So looking at the CME, they're going to apply price limits known as circuit breakers to the Bitcoin futures at 7%, 13%, and 20%. So this actually follows the same structures that are in place for the equity index futures, which means that if you remember the night of the US election, the S&P future on Globex fell 5% and got stopped out at that point. Trading halts multiple times before then we rallied back open. That was a 5% halt because it was an overnight trade. When the floor opens, then it resets to these specific incremental percentage margins. Trading will not be allowed outside of the 20% price limit. So actually, on these futures on both exchanges, Bitcoin will not be allowed to rise or fall more than 20%. So if you're talking about a one-day explosion in price, which we've been seeing at the moment, that actually can't happen as a function of the market structure on the futures contract. Now the other thing is here, don't forget, trading can be halted at 7%. Well, Bitcoin moves 7% like it was 0.1% if you're looking at a normal derivative. So one thing is, this was a good graphic that I saw, and this was looking at Bitcoin volatility, and it's triggering of future contracts. So this is just looking at price activity from yesterday. So trading halts can happen on the upside as well as the downside, don't forget. So if this was yesterday's Bitcoin on futures, we would have got halted once at 7%, we would have got halted again at 13%, we would have got halted at 20%, we wouldn't have been able to trade because we would have been at the 20% level for an entire 1 hour. It would have reopened, we would have been halted again, and again, and again, and again. So how, the first couple of days of this price activity that's going to be seen on these contracts is going to be incredibly a period of exploration, really, of how this is going to work in reality. Certainly, trading halts, I am sure, over the first couple of sessions is going to be a really frequent theme. But how can you trade a market which is constantly just being halted, and also the barrier to entry and the size and margin and so on, and the size of leverage that you're trading? It's just going to be very interesting going forward. Okay, looking at the calendar, a couple things here to look out for, of course, is before non-farm payrolls, we've got UK data. I would say UK data has kind of taken a bit of a backseat. The political context needs to be taken into consideration, but now that that has moved on or progressed, let's say, I would be aware of the numbers coming out, but I wouldn't be looking for any real sharp reactions, not unless we get an extremely outlying piece of economic data. You've got construction numbers, industrial and manufacturing output, and UK trade balance to be monitored at 9:30. Otherwise, looking further forward, you've got non-farm payrolls. Now, that's expected at 200,000. Looking at the context here, it's kind of a bit of a repetitive theme. The jobs data is, as a headline job creation figure for non-farm payrolls, is really not relevant for the discussion in reference to what the Federal Reserve are looking at in terms of their monitoring of economic performance across different sectors, as to then how it's going to shape their thinking towards the dot plot matrix, which will come out later this month, alongside their interest rate decision, where we're going to anticipate the next hike from the Federal Reserve. What is important, though, of course, and probably outweighs the headline figure, is the average earnings number as the precursor then for tracking that of inflationary conditions. So once again, the direction is, from an execution point of view, yes, the market, the algos will react to the main headline figure first, but the underlying direction of how the market might play out from the rest of the afternoon might well be derived from the average earnings figures. We'll look at non-farm payrolls much more closer later this afternoon. One thing, of course, to keep in mind, as is always the case with non-farm payrolls, you've already had a bit of a move this morning. That DAX level could be quite interesting to see whether that holds, whether people have got really the appetite to break that level, given the fact that non-farms is looming, and typically people tend to sit out the market until that jobs data is seen. So it could be quite a good level of resistance there in the DAX. Elsewhere, also helping the DAX, the euro currency is under a bit of weakness, or under a bit of pressure, I should say, this morning. So that kind of helps that export view of the currency. On the downside here, just looking at a daily continuation, just be mindful of a low at the 21st of November coming in here down at around 117.28. Rough reference point as well for some of the price activity in October and going back to the summer. So fairly significant levels, potential support there coming up in the euro. Other than payrolls though, you've got Michigan. This is a preliminary reading, but again, I'd be monitoring, but this has been quite a stellar piece of American data. Confidence, certainly from a corporate as well as consumer perspective in US, continues to track at pretty high levels, so expecting that to remain the case today. And then you've got wholesale inventory data as well as Baker Hughes later this evening. So that's it. Gonna leave it at that. I've seen a few questions in the chat, so I'll address those just when I come off the mic. So have a good session and a good day. If I don't speak to you before then, have a great weekend. Thank you very much.